Good evening, friends. Today we have with us Mr. Pradeep Kumar, MBA 2013. He is the head of strategic initiatives of PayPal, which is a fintech company, and he'll be talking about future of fintech. Pradeep, over to you.
Hey, um, Nikhil, Eddie, and Aditya and Gayatri. First and foremost, thank you to you all for starting the webinar series. Then special thanks for having me as a speaker and giving me this opportunity, and it's such a privilege to be part of this webinar series. The future of fintech, right? So whenever people hear about fintech, and then each and every one of them have their very own image in their head, very own interpretations, and then they start thinking what exactly is the fintech? So even before we go further towards the future and then predicting and all that business, let's talk about what exactly is fintech, and then we will move forward from there, right? So whenever think about anything that you do with money, think about the entire life cycle, the value chain, whatever that you do with money. Whenever you earn money, whenever you spend, like save, lend, and then insure, and all that stuff that you do with money. Whenever and if and when there is if the technology has a much more stronger impact or plays a critical role in terms of how the money reaches you or how the money goes out from you, then it is what we call it as a fintech, right? The technology has a much more bigger crucial role in terms of how you manage the money or how you move the money, then we call it fintech, right? Sometimes people also start thinking in terms of hey, what is fintech, or is it tech fin? What about the different sectors out over there, subsectors, and should it have blockchain? Should it have AI, ML, deep tech? Today we might have all these fancy terms. Tomorrow there might be much more newer fancy terms. But for the sake of simplicity, the way that how we would do it is, if there is a component of technology that plays a role in any of the way that how we do things, then we call it fintech for the simplicity's sake, right? Then how do we look in terms of the future for each and every one of this? So as you can see, each and every sector is very nuanced. Each and every one of them have their very own opportunities and very own challenges. And quite frankly, it is very difficult to look at each and every sector and subsector and then talk about their future, right? Probably the Dr. Strange could do it, but I'm no Dr. Strange, and it will be very difficult to double click on each and every sector, subsector, and then say that hey, this is what is happening in invest-tech, this is what is happening in lending tech, this is what is happening in insure-tech, and this is what is happening in wealth management, and so on, right? So what we will do is we will look at some sort of a common themes, factors, and the characteristics that are very common to all of these things, right? Like what are all the critical ones, what are all the foundational ones, understand them, and based on that, try to look at how the future will look like, what will define and drive them, right? So the best example that I would like to take a look at it is the movie and the entertainment industry, right? Say if there is a movie, it really doesn't matter whether you're watching the movie in a big screen or in a small screen or at a TV at a home, right? Yes, of course, sometimes the special effects will make a big difference, the sound system will make a big difference, and things like that. But at the crux or at the very bottom of it, what really makes a very big difference is it's all about the story and the screenplay, right? Sometimes even the actors may or may not make a difference, because sometimes you could just watch the animated movies as well, right? So take Lion King. It doesn't matter whether is it like a live animation one or a cartoon one or actors are actually doing it. This is the story and the screenplay, and then how the narration is the audience really engaged and things like that. So what we would do is we would kind of look at the fintech and then say, hey, what are all the factors or the pillars that would be much more common to the multiple subsectors and the sectors out over here, and then how do we define them, and what really makes a big difference out over there. If you really think about it, right, money is digital, and it is becoming more and more digital as the day goes on by. The way to look at it or think about it is, how many of us actually see our salary in cash, right? Maybe our grandfathers or fathers, were getting the salary in cash, and then they were trying to spend the money in different places in a very physical way. But nowadays, all we see is we get an SMS saying that, hey, money got credited into your salary account. And as soon as the money gets credited into your salary account, the next minute what happens is money is automatically debited to the EMIs for the bills that you pay if you had actually kind of set it up out over there. It is the same, like, let's say that you're buying a stock. Do we actually see the stock certificates like in the olden times? We don't see the stock certificates. Think of, do we actually pay the bills, go in person and then do it? Nothing, right? Everything, whatever that we do, it's nothing else but zeros and ones. The account entries and debits that happens at multiple computers, it's just nothing else but ones and zeros in all these places. So now, if the money is becoming more and more digital, is it good or is it bad, right? Both of them have their very own pros and as well as the cons. So since the money becomes more digital, it also brings its very own set of challenges along with the conveniences. So there are four things that becomes a problem, right? One is the privacy, risk, security, and then the fraud. Privacy, right? Now, how will you feel that if somebody is actually tracking all your expenses? Where do you buy? What do you shop? Like, are you spending too much money on liquor, or are you spending too much money on cigarettes? What kind of magazines do you read? What kind of books do you buy? And how is your spending pattern? What if somebody is kind of keeping a look on it all the time? Like, will you be happy about it or will you feel bad about it, right? Then the next thing is the risk. The risk comes a little later, but the fraud. What if someone steals your identity? What if someone steals your credentials? Then which means the stealing up of your money or stealing up of your wealth becomes much more easier. Of course, the convenience and the challenges goes hand in hand, right? The next part is the security. The security doesn't comes along only from your end, but what if it is your banking institution? What if it is your financial institution? So if your banking institution and the financial institutions are not secure, then again, it becomes a much more bigger challenge. Then the entire risk management portfolio, right? Like, how is that overall risk is being managed in an end-to-end fashion? So now, if you take a step back and then think about it, this entire financial services sector, whatever that it might be, it all had this very own unique problems, right? Like, so even tech or no tech, privacy, security, risk, and the fraud, all of them are applicable towards the financial services sector, and everybody looks at it in a much more stronger view. But thanks to technology, what happens is all of these questions get super compounded, and then which means whomsoever is looking at the risk, then they have to look at the tech risk, they have to look at cyber security, then how do you ensure the privacy is safeguarded against all the other threats and so on. So one is the more and the more it becomes digital, and all these four factors in terms of privacy, risk, security, and fraud deserves some special attention, making it life much more difficult in a way for the people who are running the show, right? So if you're a corporate or you're a startup, and if you're not taking care of all of those things, whether it could be mobile or it could be any other new form factor, then it all becomes a challenge, right? So considering the challenges and considering the downsides, then now we have the regulator. So what is the job of the regulator, right? Like, of course, the regulator plays a critical role in any industry, right? It could be food, it could be health and all that. But whenever it comes to the financial services, the job of a regulator becomes much more tricky, right? Why is that? Because it is money, and money is personal, and it is not necessarily in terms of the technology, right? Think of the chit fund scams, think of the stock market scam. Whenever something goes wrong, we don't actually blame the individuals who actually did some stupid things, who were greedy and who were irrational and then like put their money in, right? It is easy for us to blame, hey, what was the regulator doing? Why is that the regulator was sleep while they were driving, or what was the regulator doing? So people usually become very angry towards the regulator, and as a result, the regulator is usually cautious, or in terms of that, extremely cautious, right? So the fundamental and the primary reason for the regulator is to safeguard rather than think about innovation. At one end, there will be startups, and then the fintech companies, and then the other corporates who wants to innovate much more faster, much more quicker. But the regulator will always be, the regulation will always play catch up, and it will be a tug of war, or um, both of them will be at the crossroads, because both of them will have different objectives. But at the end of the day, regulator will always win, right? So recently I was reading another story where a couple of years back, when the RBI wanted to introduce the second factor authentication, like which most of the companies chose to be the OTP in India, the regulator called all the stakeholders, and they just said that you know what, hey, we want you to kind of implement the second factor authentication, and all we want to know is when will you implement it, right? So the e-commerce companies which were very nascent at the time, or even the other stakeholders, they were all much worried about, hey, you know what will be the user experience? Will it be an impediment because each and every time you have to get the OTP from the SMS, then you have to enter? Will that be a bigger challenge? Like, will people like it or not? That's what the corporates or the companies were thinking. But the regulator said, you know what, nothing doing. We want this to be implemented. Just let us know when will you do it, right? No arguments, no discussions, nothing. But thankfully to that decision, you're like, what does that happen nowadays? People have started accustomed to the OTP, right? So nowadays, if the OTP doesn't come to you, then you start thinking that, what, something has gone wrong. So rather than looking at that as an factor which we don't like, it has become a factor that which we look forward to, right? And as a result, what has happened is, at least until so far, the fraud or the loss of money due to any of this money transactions has actually come down, or is it very less when compared to the other parts of the world where there is no second factor authentication. Of course, the fraudsters are kind of coming up with new methods, what they call it as SMS phishing, and then like, trying to read your SMS in multiple other ways so that like they could defraud you, right? Probably there will be new other mechanisms or multiple other authentication factors the regulator will find out, and the regulator will hold the corporates and the organizations accountable so that the fraud doesn't happen, or the security is not compromised, right? So which means no matter what kind of new technology or new kind of innovation will happen, the regulation will also play a very critical role, or will play a very major role. And when it comes to the financial sectors, there is no kind of a going around, right? Like, if you're a cab riding company or a food delivery company, you could kind of play around with the regulation. But when it comes to the financial services, until unless the regulator blesses you to do what you want to do, you really, really cannot do. Then this is the much more interesting piece and a much more critical piece of it: trust and reliability, right? If you really think about it, money, it is nothing else but a funny thing, right? Like, we all of us have come together and then said that, like, this is the store value of this one particular item. Today we might choose to decide to say that it is 500 rupees, and tomorrow we might say that, what, this 500 rupees is not worth it. It is something that, what is that we all come together, agree upon, and then say that this is the value of it. So if only there is no trust among the parties, if there is no trust among the system, if you really don't trust your particular bank or the financial institution, then you really wouldn't go for it, right? The most of the time, what really happens is, if you start thinking that, what, that particular institution might go out of the business, that's when we all of us go stand in the queue, and then like, we like to withdraw the money from that particular bank or from the particular institution, or we kind of sell the stock if we think that, like, what, the stock is not really going to do well. At the end of the day, it is all about trust. That is why the US dollar says, in God we trust, and in the Indian currency we say that I promise to pay the bearer, right? It is the promise. So today it could be the currencies, tomorrow it could be the digital bits and ones. At the end of the day, it is all about that trust, right? Like, so once when you get an SMS saying that, hey, the money has come to you, you know for sure that the money has come, right? But let's say that thanks to all of this technology, there is a tech glitch, right? Like, say your bank servers goes down, you're not able to access the money. As a result, you're not able to pay, and you can't even access your own money. And there is a tech glitch, and as a result, let's say that you're sending 10,000 rupees to somebody, and then they get only 1,000, or like, maybe 100, or let's say that they get 100,000, right? Then again, trust goes for a toss. And whenever it is not reliable, like say when 1,000 becomes 10,000 or 10,000 becomes 100, the reliability goes for a toss. It is not only in terms of that, and let's say that you go check your bank account, and instead of 10,000 you have only 1,000, like a zero is missing because of some stupid technical glitch. So the technology, which could be a curse or which could be any of the innovation, no matter what you look at it, if it is not trustworthy, if it is not reliable, then again it becomes a very big challenge in terms of the financial sector, because the trust and the reliability is the bedrock of your financial services sector, right? So just to kind of recap, one, the money is becoming more and more digital. Because of the digital capabilities, we also have too many other new challenges in terms of privacy, risk, security, and then the fraud. Then your regulator has a major say in all of these financial sectors. And despite the domain that you are in, the trust and reliability matters the most. If there is no trust, there is no reliability, then no matter what the regulator does or what the regulator says, or how good is your tech, or how good your privacy features are, how good or bad your security risk and the fraud features are, nothing will really matter, because at the end of the day, trust and reliability matter, right? So now, keeping this four pillar stones in the mind, let's start thinking about how exactly the future will look like and what it really means to us in terms of uh, the COVID or no COVID, right? How do we do that? Predicting the future in general is a kind of a tricky business, right? Like, this is just like, we will kind of look at how or why this is kind of a very difficult business, right? Just we will quickly run through all of those things. We will not spend much time on of this. This is just to kind of emphasize that predicting the fintech or predicting the future of the fintech is a little bit of a tricky business, right? So sometimes we say that the best way to predict the future is to invent it, but even the inventors don't do well, right? Um, Now I'm very sure Thomas Watson feels very bad about his prediction. It is the same thing with the inventor of the cell phone as well, right? So if the inventor of the cell phone and the inventor of the IBM PC machines weren't good able to do it, then we mortals really don't have a good choice in predicting the future, right? So the predicting the future again becomes much more critical when we think about the technology factor as well, right? So how many of us would have actually felt that the internet would really change our lives? Say, for example, the internet was initially done for the defense systems, but now it is helping us in each and every factor of our life. The same thing with the iPhone when the iPhone came, right? So when the iPhone came, people would have never expected that it would change the way that we order food, we eat food, and then how we travel across, and then how we engage with all the others. Think of the app ecosystem that the iPhone has brought in. I'm very sure that nobody would have predicted it. At the same time, there have been a lot of tech inventions that were very promising, but never really lived up to their promises. People thought that we all would have this flying devices, the personal transport will be a very different ones. And then people have been talking about autonomous cars for ages, but it hasn't happened. The same thing with the machine learning and the other technologies, right? Like they have been there for a while, but until the recent times, the machine learning or the deep learning, none of them really took off. There is also another set of a challenge when it comes to the technology, right? Like the second order or the third order impact of it. Most of the times, whenever we invent a technology, we never understand or appreciate how the culture would adopt it, or how the end user will really use that technology for it, right? You might think that what, hey, I'm actually kind of building this anonymous system, for example, for secure and private communication so that the governments don't snoop in. What happens then, all the crime folks really do use it, and then for all the bad actors come and then start using the technology. Think about how people use Bitcoin, or for all the nefarious activities from drug trafficking to weapon smuggling and whatnot, right? So whenever you think of technology, it is not necessarily the good thing, but also the bad actors as well, right? So all this makes the use of technology, or the predicting stuff using the technology, makes it much more difficult. Now add the pandemic aspect to it, it becomes much more difficult, right? Like say for example, how many of us strongly believe that 3 months later or 6 months later, we all will still continue to use the mask? Now, as a result of the pandemic, now every company is rushing towards the work from home and then saying that we will extend it and things like that. But now the productivity is too high from the work from home, but will the productivity sustain even after few times, right? So now if you ask me, hey, what does it have to do with all of this fintech? Fintech is a major part of how we live our lives, how we spend our money, and all of this has a definite and indirect impact towards it, right? Like it is a function of economy, it is a function of our living habits and all that. So how we live, how we spend money, and all that has a very big alignment towards how all this future will look like, right? So one thing that we could be certain is that any prediction about the future is uncertain. So having said all these disclaimers, having seen about the fintech and how difficult it is, let's play um, how exactly the future will look like. We could already see certain trends that are happening now and then, and that will kind of give us a clue on how the future will look like. the number of payment companies will reduce, right? So the reason why I say that the number of payment companies will reduce is, it is not that it is a business cycle and the companies will run out of money or they will not be able to raise money, and as a result the consolidation happens. It is not that we are talking about that, right? That might happen, but that is not exactly what we are talking about. One, if you have been observing the world of startups and the corporates, each and every startup or most of the startups wanted to be a financial services player or be a fintech player. Think of the mobility companies, right? So even the mobility companies wanted to offer fintech services. Think about the wallets that they were offering, which you could actually use not only to pay for your cab, but where if you put in money over in that wallet, you could use it in the other players. It is the same even with the food delivery companies. Think about the device manufacturers who were kind of thinking that, hey, you know what, you're owning my device, I could read your SMSs, and as a result, I could think about your bill payments, and as a result, I will be able to figure out how much credit worthy you are, and as a result, I will kind of help you to get loans. There will be a lot of other mobility players, device manufacturers who are thinking that, like, you know what, I want to get into a pie, or I want to get a piece of action in terms of the fintech or in the financial services world. Now, thanks to this pandemic, what is really happening is the economy is shrinking, and then people are losing their jobs, and people really don't have money to spend. And as a result of all of these things, the primary business itself is getting affected, right? So if you are a mobility company, then you're much worried about your mobility, and which means you want all your best minds to work on the mobility problems rather than the fintech problems or the financial services problems. It is the same with the device manufacturers, right? If the device that you're selling is not doing good, then will you worry about that? Because the cost of business is also going up with all the social distancing norms in the factories and so on. So most of these companies which did not have the fintech as their core business, they will get off that, right? So this is not the time to diversify or to play with the financial services sector. It is a time to diverse the business that is not from the core. As a result, many companies which were not the primary ones, that will get out. But there are certain exceptions to it, right? Let's say that you are an ad selling company, then it makes a lot much more better sense for you to get into the business of enabling the commerce. Why is that? Let's say that somebody is displaying an ad for buying food or buying your shoes or buying dress, or it might be anything that is there is an ad for you to buy something. It could be as simple as an educational course. Then it is in the best interest of the ad selling company to enable the selling feature as well right then and there, rather than the call to action happens at a later point of the time. I see the ad, but I really don't act upon it. So what if I could see the ad and at the same time, I could also make the payment and then buy it? It could be a discretionary spend. It need not be an indiscretionary spend, right? So whatever that it is, what if I can help it? So even among the ad selling companies, some might choose to do the payments all by themselves. Some companies might be willing to kind of outsource it or work with the pure play payment companies themselves, so that they need not worry about all the other four factors, right? Like say the regulator, privacy, security, trust, and all the other factors. So what will happen is the companies which are not core to the financial sectors, they will get out. Some of the potential ad selling companies could get into the enabling of the commerce with the partnering towards the payment companies or payment services companies. Then what will happen to the payment services companies, or what is actually happening to them, right? Some of the payment services companies at this point of time are thriving, and some of them are not doing good. Why is that some are thriving and some of them they are not doing? The reason is, again, the economy is shrinking, and as a result, like, if we haven't been traveling, so which means if you have a large sector base in terms of travel, ticketing, or a mobility, or a food delivery, any of those aspects which have been taken a hit due to the COVID, then it has kind of gone out for the toss, which means people are not spending money. And if people are not spending money, there is no way that payments companies could make money. Why is that? Because the payments company are in the business of moving money from the buyer to the seller in a much more frictionless manner. But now, if you got no money to spend and if you got nothing to buy and nothing to sell, then it comes to a standstill. Having said that, there are other places where we have been spending a lot, right? We all of us have been like, buying a lot of groceries, buying a lot of essential stuff. So which means if only if your customer base or your merchant base is diversified, then it is a pretty good. If the customer base is much more diversified across the globe, then it is a pretty good thing for you. But again, if your customer base or if your transaction is much more dependent on the cross border, then again you would have taken a hit because the goods are not moving across the borders due to a lot of restrictions, or if not, they are very slow. So even in general, the number of payment companies will reduce. It's not only that, it is also the business model or how their cost structures look like, right? So let's say that you go to an e-commerce store and then you are buying something for 100 rupees where there is an MDR for 2%, right? So if you think like, hey, what is this 2% MDR? Think of whenever you went and then bought something sometime back in the physical stores, and then whenever you presented a credit card, people will say that like, you know what, hey, I can't accept credit cards. And if you're giving the credit card, then I'll charge you 2% extra, right? So the 2% extra is the rate that the merchant usually has to absorb. So nowadays in most of the places, people do absorb the charges, right? And then this 2% doesn't goes to one particular entity, right? Out of this 2 rupees, 1.25 goes to the issuer bank or the issuer card, right? So the issuer is nothing else, but let's say that if you have an card and then if you see the bank that gave you the card is what is called as the issuer bank, right? Then we also all know this networks like say Visa or a MasterCard. Then the Visa or a MasterCard or a network takes a cut of it. Then wherever you swipe the card or wherever the website that you actually use the card, and if that particular website or the payment gateway or the payment service provider, he would also partner with the bank to ensure that what we call it as an acquirer bank, right? So even they would take a cut. So the 2 rupees is kind of divided upon across the issuer, network, and then the acquiring bank of the payment company or a payment service provider, right? So only after giving money to all of these folks, then the payment gateway makes money. So which means if I am a payment service provider and if I'm helping an e-commerce company facilitating a transaction of 100 rupees, I either make only 0.25 to 0.35. And if there is a switch involved, then the switch takes out the 10 paise. That is why the difference of 0.25 to 0.35, right? So as a function of this, it is a very thin margin business. And as a result, unless you keep your costs much more down, and if you have a good partnerships with all of these banks and all of these network players and all of the stakeholders, you as somebody who is putting up this mechanism of bringing all the people together, right? Like the issuer, networker, acquirer, and then the e-commerce company, it is a very tricky business. So if someone is telling you that, hey, payments is a commoditized business or it is an easy business, probably they really do not know what they're talking about, right? One, it is complex and it is challenging because of the thin margins and whatnot. So now if you think about it in this manner, think about how difficult for the payments companies will be, right? The reason why I'm emphasizing a lot of the payments companies is one, in terms of the fintech, the payments companies were the ones which were raising a lot of money, and that is where the action was. And many of the companies were looking forward to this, right? So now if we extrapolate it, if you are a payment services company or a payment service provider or a processor, think about how much money that you should be processing for you to make a top line revenue of 1 million US dollar, right? We are not talking about how much is your bottom line or how much is your profit. To make $1 million top line revenue, you need to be processing somewhere close to $400 million of USD to make a top line revenue of 1 million, right? For the 0.25 cents. Then you have your very own cost of paying your engineers, paying your business development folks, and all of them. So it's a tricky business, right? And this is one of the reasons why most of the payment companies also wanting to get into the lending business. That is why you would have seen too many payment companies saying that if you're a consumer, hey, you could do the pay later, or you could aggregate all your payments and then pay at a later point of a time. So all of these payments companies wanted to get into the lending business because payments were thin margin, and some companies were good at making money and many companies weren't good at making good money. So each and everybody wanted to get into the lending business, right? So when they were trying to getting into the lending business, what really happened was many people actually kind of forgot that lending is not just about giving the money, but it is also about collecting the money. And again, lending is also highly regulated. So people felt that technology could really help them to bring the cost down. They felt that, hey, you know what, I want to acquire the customers. Or you know what, I already have people who pay through the payment gateway, so I really have an existing customer base. They felt that a customer acquisition cost I could bring down through the technology. What about the underwriting or evaluating the people who borrow the credit, or if they are the good people, can they pay it back? Oh, don't worry, we will use AI tech, we will use ML, we will use all sort of the tech to ensure that people really, we know who is good person and who is a bad person. So which means the underwriting cost will come down. Oh, what about collections? Oh, no worries, we can again bring the technology again to collect the money back from the people, because whenever they pay, we know that when the salary is coming, we will be able to figure out how we can collect the money back, right? So people went into the assumption that tech is a cure for all of those things and lending will be much more easier, right? But again, as I was mentioning, people forgot that lending is not just about giving the money away, but it is also about collecting. And the collecting is a function of good underwriting practices and then proper evaluation. And not only to one, they had two problems, right? One, many people who were using the technology to make all of these things like customer acquisition cost, underwriting, and then the collection, they really couldn't pull it off because technology wasn't really that good enough, or technology wasn't really helping for most of the players. Then there were other macroeconomic factors causing the liquidity crunch. And as a result of that, at some point of a time, people were talking about, you know what, lending is not a product anymore, but lending is a feature. But now that feature is a bug, and many of the payment companies which wanted to foray into lending, or many of the other companies which wanted to foray into lending, will not be lending because systemic risks are there inherent as well as the external ones, right? So again, to kind of sum up, companies which are not pure play fintech players, which are not payments or lending companies, will get out of the business. Even the fintech and the lending companies, they will come down because it has become much more challenging due to the other environmental conditions. And anybody who was trying to do lending as a feature, again, they will get out of the lending business because now it has a bug. And even the AI would actually go for a toss, because whatsoever the data or the pattern that you had accumulated 3 months before the lockdown all across the globe would change because the user behavior has changed. And as a result, the models have to be rebuilt. The data has to be collected all over again. And then we really have to train them back again. So these are all the challenges, right? So if you think about, hey, these are all the big challenges across the globe of the financial services sector world, what are all the promising things? So the major promising thing that is happening is, think about the existing incumbents, right? So what is it the incumbents were doing? Like think of your, what we call it as a dinosaurs, which were not adapting to the technology. Thanks to all this lockdown, shelter in place all across the globe, all of these existing incumbents are people who were perceived not to be so good at technology. They had no choice but to accelerate their digital transformation, right? You could also kind of look at what Microsoft has been announcing in the recent days, where they have been saying that they have been seeing digital transformation that would take 2 years or some other time frame happen in less than 2 months, right? So which means the digital transformation in all aspects and in all phases for the existing incumbents are really catching up, right? So that is a good thing for the consumers, and it is a good thing for any of the startups or firms or corporates that are helping any of these financial sectors to embrace the digital transformation and then to accelerate the digital transformation, right? This is more similar to the meme that we most of us would have seen. Hey, who implemented the digital transformation? CEO, CTO, CIO, but the correct answer happens to be the COVID-19. So all the financial services sectors, companies are embracing the digital transformation. So earlier, what would also happen is, like the incumbents would think that, like, you know what, if we really do not know the technology, let's go partner with a fintech company, right? The fintech companies were also much more interested to go partner with the incumbents or the dinosaurs, because the incumbents had one thing what all the fintech companies didn't have it, right? So the fintech companies had the cool tech, cool UI, cool UX, but they did not have one thing: customer base, and then the distribution challenges. And then again, people did not trust. So if you want to buy an US stock from India, would you actually go through the pain and then, like, you know, still stick to your regular bank, which enables that? Or will you go through one new startup that says that, hey, you know what, you could own fractional shares of the US company? You would always have a worry, hey, what if the startup gets shut down? But you know for sure that the incumbent will not shut down, and then you will always trust a reliable bank, right? So these incumbents and as well as the fintech companies are actually kind of doing a dance, right? They say that, hey, you know what, I'll give you the customer base, I'll help you with the distribution, you help me with the cool tech, you help me with the cool UI, UX, and then help me with this new fancy things called as artificial intelligence and machine learning. You could run your models on the huge data set that I have, which you don't have, right? But now, thanks to all of this digital transformation, many of the banks will be left, or many of the financial institutions will be left with no choice but to be the digital incumbent, right? So it is more like what happened again in the other industry, right? Think of what Netflix was doing towards the streaming industry, or to the TV industry, or even to the Hollywood companies, right? So now, who is the biggest competitor to the Netflix? It is Disney Plus, right? So it has become so good, and Disney Plus has learned this art pretty good, that Reed Hastings himself says that, you know what, Disney Plus has been doing a phenomenal job in terms of execution, and then they have disrupted themselves for an increment of their size and that quality, right? It is the same thing that would happen among all of these financial institutions. For example, today, if I want to cancel my credit card with my bank, I'm actually not able to cancel it because there is no way I could cancel it online. If I call the customer care is not available thanks to COVID. Even if not, reaching the customer care is always a pain, right? You have to press n number of things. So what will happen is the financial institutions or the banks will be left with no choice but to embrace the digital information. So what it means is that there will not be one neobank or two neobank, right? So all the banks will cut down their branches because they will also think that, hey, you know what if I can serve my customers without the banking facilities, right? So whatever that they're saying, they were saying that, you know what, banking is necessary, but the banks aren't necessary. The physical banks will go away. So which means whatever and wherever you need paper, wherever you need physical presence, and wherever you need all of those things, they would go away even from the digital incumbents. And this is not a pipe dream, and it will not take like say 2 years or 5 years, but all of these things will happen in a much more faster manner. And as a result, the incumbent will be the new disruptor all across the sectors. It could be any of the sectors that we saw in the second slide, right? Like be it saving, lending, investments, insurance, claim, whatsoever that you're doing, either it could be B2B or a B2C, it could be a shipping sector, or wherever that you're doing out over there, the incumbent will be the new disruptor. So what will happen is the bigger fintechs which have already grown to the scale and which already have a distribution, they will survive. But if you are a small startup or a smaller fintech who really don't, if you can't work with the bigger players, or if you don't get acquired by them, or if you start don't servicing from them, then you will be left with the operation, right? So these are all the major factors that would happen. Then now we could actually kind of go ahead and then say, hey, what are the other factors that will happen from the downstream factors, right? The wealth management for all. Why is it the wealth management for all? Again, thanks to this pandemic, right? So what will happen is the divide between the haves and the have-nots, and the people who have money will start thinking about, you know what, hey, what the heck am I doing with money? So one of the things is, if you actually see the investment, many people have time and many people have money. You could see that people who have been trading have gone up much more higher, right? So some of the private players who help with the trading have said that, like, you know what, hey, we have been seeing 3 to 5x growth in our platforms. People will start thinking more in terms of, hey, how do I manage my money? It is not only about managing the money. Think about a shop that has shut shop for 3 months or 2 months, then which means they all will start thinking, you know what if there comes another pandemic again? And what if I don't have revenue? And then what will I be doing with the money? And how do I manage my finances? So wealth management or a personal finance management will be critical, not only for the corporates, how do they manage their cash flow? Do they need to have a stronger balance sheet with much more good assets rather than the debts? Or it will be the same for individuals, corporates, and it will be common for across the strata and across the different subsectors of the people as well. So the wealth management will be there. So if you are somebody, or if you are a company which helps in terms of wealth management for a larger section of the people, then that is a pretty good thing. Digital money will permeate, right? More than ever, right? Like, in despite we saying that, hey, you know what, money is more digital, still if you go and then look at the regulators, be it US or be it India, cash is still king, right? Like, you know, if you think how much of that is a digital money and how much of that is a physical cash, still the cash rules. But now, even though there hasn't been any theories that says that, like, you know, the virus gets spread through the currency notes or something like that, still people are a little skeptical. And as a result of all of those things, right, and as a result of all the other factors that we have seen, the incumbents moving towards the digital and digital transformation and all that, digital money will permeate much more higher, right? So there might be a case where the governments will say that, hey, you know what, I would probably go towards the digital currencies rather than actually printing the money, because even the digital currencies could be much more tracked better. Of course, it will bring its very own challenges. And as a result of this, digital money will permeate all across the faces. And more than ever, the position of the cash has been challenged ever. It is not just going to be the digital money per se, right? Even the cards, whatever that we use, it's not going to be less currency per se. It is also going to be more less cards, right? So that is why if you actually see the news, there have been people where they even sanitize the cards that you present. And and as a result of what will happen is the contactless payments will start rule, which means QR code, or maybe even gestures, or, like, you know, phone tap, or whatever that it is. Very simply put, like, no matter the form factor or whatever the implementation details might differ, but long story short, the contactless payments will rule, and that will play a much more uh, prevalent form of payment rather than anything else. If all of these things goes digital, the micro business will also go digital, right? Let's say that this is something that which we have been seeing even earlier, but it will again much more accelerate, right? Like, so this was not happening in a second tier city or a third tier city, right? If you're living in a metro, and then if you've been big industrial office and things like that, and then if you show next to your shop, there was always somebody where you can use an QR code and then pay for any of the major players that were available in India. But think about it, let's say that you're going further downstream to a second tier city or a third tier city or a village, and if you want to drink a chai or buy a cigarette in an highway store, not always, like, the digital way of accepting the cash or transacting was not happening. But what will happen is, thanks to all of these challenges that we face, micro businesses will also go digital. So which means either it could be a smaller transactions or a micro transactions, all across the place we will be able to transact digitally. And of course, thanks to all this social distancing and whatnot, people will try to figure out a way to eliminate the queues. This is another thing that could potentially happen, right? Like, say, what you don't want to actually go to the store and then keep buying for it. If there is a way for you to order ahead in terms of the store, let's say that you want to pick up something and not always the online ordering of the method is preferred, what you can actually do is you can create a shopping list, order the shopping list, and then you could pick it across the multiple stops. So which means the connected carts will become the commerce platforms, or this is another area that could happen. Then again, this is also due to this, like, again, where people, the quick services restaurants will be really quick. The ordering ahead not necessarily be for the shopping items that you want. You could also do for your food, which means the drive-through will become much more better, where you need not even wait. You could probably order ahead. Even the payments could have been made much more ahead. So all you have to do is go collect the food and then move on, rather than it is like how you get into Uber, you don't even wait to pay for it, right? Like the payment is automatically done. The same thing could happen even in the quick services restaurants. Or even if you go over there, like, even with the cashier or the card, the payment could be automated even if you do an in-dining. So these are all the small stuff, but these are no more in the realm of science fiction, but all this will happen very soon and very quick. Yeah, this is another thing that we will see, right? Like, for good or bad, actually for bad, there have been a lot of factors that affect the human life of the people. And then again, as we spoken some time back, the divide between the haves and have-nots, or the 1% is kind of growing way too high, right? And you could actually see here in the world, there isn't any day that goes by, what, we don't see any sort of a natural disaster or some part of a globe which actually needs the help from the people. And as a result of this, you will see the philanthropy or the donation efforts go much more higher. Think of any crowdfunding platform or, like, donating platforms. You would see that in all of these places, like, people come together to kind of help. So which means all of these technologies will become much more better. And again, in all of these places, like, there are a lot of people who create fake courses, who scam people and all of these things. So which means your KYC, is it for a good one or a bad one? Are you doing money laundering, or are you spending the money? All those challenges whatsoever that we saw in the first four slides will also be much more prevalent, and this would affect all of these things. But people would start not only earn more, but the people who earn more will also become much more cognizant and much more cautious about what is happening across the world, and then be kind. And there are a lot of trends and the data points which say that, like, what, hey, people have been donating a lot than ever, and the technology will keep up with this, or technology will enable it much more easier and much more faster and better for all of these things. But this is, if you think about it, whatsoever that we spoke until now in terms of technology or the fintech, right? Like services, they're all much more in smaller issues when you can think about the financial literacy and then the universal financial health, right? So the reason is there are 7 billion people, and there are a lot of people who are still unbanked, who don't really have access to the proper financial services. The financial inclusion is not out over there for the people, right? It's not just about the financial inclusion. There are a lot of people who really can't earn, right? Like, as I was saying some time back, what if there is another pandemic? What if the pandemic is much more prolonged? What if there is a second wave? And if people really can't earn, how will we take care of the people, right? So say, think about the stimulus that the US government is giving, right? It is literally nothing else but the universal basic income. The government says, hey, you know what, you're jobless, I'll give you $1,000, go do spend about it. Will this become a norm all across the places? And even if people are earning, how will we actually go tell a local kirana store, hey, you know what, if you start accepting money in a digital way, then we will be able to assess you much more better. I remember a story where sometime back, right across the Bombay Stock Exchange, there was somebody who was selling sandwich. And the person who was selling sandwich really couldn't go to a bank and then borrow the money because the bank really did not know how much revenue the person was making. And there is no way to validate them. And as a result, they couldn't figure out how much they could lend him, right? So somebody actually had to sit with the person who was calculating how much sandwiches he sells on a regular basis, when is the peak, when is the low. And then they figured out like, you know what, hey, this is the revenue that he makes on a month-on-month basis, and this is the spend that he does. And since he spends this much, and this is how his cash flow looks, probably we could give him this much amount of money at this particular interest rate and for a term of say 3 to 6 months and so on, right? So this was possible, or this would have been much more easier if the money was, there was a digital trail involved to it, right? It is the same for all of these micro businesses or the small kirana stores who really don't have a digital way of tracking money, or who are not formally banked. There is a way for us to kind of track and then figure out. Of course, there are privacy, security, trust issues, and then like the taxation and whatnot. But at the end of the day, we really need to educate all of these people in terms of how to save money and how exactly they could manage their finances if they want to get a loan, or if there is an unforced, like, you know, how they should probably take insurance and all that. So think of all things which we spoke again in the first slide, right? Like saving, insuring, and making more money, and then saving for the future, and then the investing. We really need to educate all of the people. It need not be something for people who make a lot of money. Even for people who earn very small wages, we need to kind of tailor the solutions and then tailor the advice and tailor the means even for them. And there would be a lot of other people who really can't earn the basic wages as well. And for a lot of good reasons or bad reasons like this, as well, people will not be able to earn money. And if people are not able to earn money, how will we kind of help them? So long story short, there will be a much more increased focus towards the financial literacy as well as the universal financial health for the 7 billion people, not just for the select few or for a section of the population of the globe, right? So this is where the future will look like. And that is all I had to share. And that's it, Nikhil. Hello.
The first question from Varun Taneja.
Hey, Varun.
How will government interference affect fintech? They bought UPI where the earnings were even less than 0.25 for payment gateway.
Varun, it is a good question. As someone who's already into the payments, and I'm very sure that you also work for a payment company, whatever the government does, it is right. And whatever the government does, it does for the greater good. And we will just follow whatever the government says. That's my answer, if you know what I mean.
I think you better go on, take out the video because your voice is not clear. So guys, have a look at Pradeep.
Sure.
Okay. Another question is from Dr. Rajshekhar Reddy. Demonetization
Hey,
exercise
doctor.
became the hand of God for many digital payment firms. How should the government and these firms make use of the COVID crisis for boosting the fintech?
That's a good question, right? See, even though people said that, like, you know, demonetization played the hand of the god, as I was saying, after a couple of months or a couple of years, the cash has again become king, or like, you know, the amount of cash that is in circulation is much more higher than the pre-demon days, right? So which means like whatever the gains that we had, probably we have lost them. If the government really wants to kind of encourage digital payments, one thing that probably the government should do is wherever the government is collecting, right? Like, you know, they have enforced the FASTag, or they said like, you know, all toll payments should go digital. Think of all possible places wherever that the government is collecting, right? It could be even the tourist spots, right? Or even think of all the milk cooperatives, wherever that the government is collecting money, they should say that, like, no more physical currency, bare minimum, I'll put up a POS machine. That's the only way that, like, think of all the places, think about railway transport, or like, even the buses that we travel. If there is a way that we could digitize in all those places, then that is a potential way for the government to kind of make use of this COVID crisis.
Anybody wants to ask a question, they can raise a hand. I can unmute them, or they can put up in the chat box. There's a question from Gaurav. He says, what do you think about CBDCs and what they might do in the payment industry? Especially China, UK, and Sweden in already advanced discussion around it.
I'm really not sure how that would play out. Is it more in the terms of India, or what is that, Gaurav?
Gaurav, go ahead.
Hey, Pradeep. So I was talking largely about, yeah, so obviously India is behind in terms of actually talking about CBDC as a future. But what do you think this will have a global impact on the likes of Visas and MasterCards and largely the payment industry?
See, people usually ask, like, hey, what will happen to the card networks, right? See, the way that how I think about it is, whenever you're taking out a middleman, right, then you become the middleman. So if you ask me, hey, will the networks go away? I really don't think the networks will go away, right? And whenever you think that, like, people might actually bring in more competitors towards the network, but eventually somebody still has to account for the money at either ends. And as a result, still, I think that they would continue to exist. Does that kind of answer your question?
I think yes. Okay. There's a question from Jinesh.
Yeah.
Germany, one of the most developed country, is also cash-heavy economy. Is it good to go digital in terms of freedom?
Jinesh, see, as I said, that's a very good question. Going digital has its very own challenges, right? So many people really prefer cash because, one, it is much more easier, right? Like, the cost of cash is in a way invisible because the government is printing the money. So which means the government incurs or absorbs the cost for it. So the cash movement from the printing press to all of us, again, it is subsidized by the government or it is taken by the government. That gives you anonymity. So whenever there is a cash transaction that is not accounted, so which means it is not taxable. And then it also helps you with in terms of privacy. Of course, it has its advantages as well as disadvantages, but now the people behavior is changing. And that is why I was saying that more than ever, people are moving more towards digital. Will we ever truly become digital? We do not know. But my guess is that more than ever, this is the point of time where the digitization will happen. And if you think in terms of the bigger payment companies, we, at least for now, we see an increasing trend or the trend of digitization on the higher end, right?
Girish,
See, there is nothing called as a good or a bad. It is all about, hey, what is that we all accept towards it, right? See, at some point of time, there was a gold standard, there was barter system, and then we have moved away from it for good or bad. So we could even kind of argue, hey, wasn't the barter system much more better and things like that? We really do not know. At the end of the day, it is all about, hey, what is that we all of us come together and then accept towards it.
There's a question from Girish. Girish, go ahead.
Yeah, Pradeep, couple of questions. One is, what does PayPal India really do? Because I don't really come across this as a consumer. The second thing I want to ask you is, in India, the fintech system is more geared towards payments. What is exactly happening on the lending side? Is there anything happening, material happening on the lending side? Just two questions.
Sure. One, what we do, I'm surprised and I kind of feel bad that you haven't seen much of the action, contrary to what is really happening, right? PayPal India, we are actually kind of doing much more better than what we thought and whatever that we felt, right? If you think in terms of a cross-border business, we really have a major share in terms of a cross-border business. Think of even the other possible or a big players that whosoever that you might think across, we actually kind of help or power their cross-border business as well. So the India business is very huge and very big. Unlike what we don't actually kind of declare or say in terms of how we are doing it on a country to country basis, but I can tell you with confidence and with pride that, hey, we are actually kind of doing good. And then we also have large tech centers, 3 tech centers, one in Hyderabad through an acquisition from Simility. Then we have also made investment in Pine Labs. Chennai and Bangalore are big tech centers. Chennai is the second largest tech center next to San Jose, and Bangalore is the fastest growing tech center across the globe. So that, I think, answers to your first part. So the second part, right? See, lending is a whole set of a big pool, right? Like, are we talking about consumer lending or what do you call a formal lending or a fintech lending, right? Like the fintech lending is a new age fintech or the subprime sector that was happening. But as you know, the market conditions for lending is not that conducive, right? Like we had, what do you call, the NBFC crisis, the liquidity crunch and whatnot, right? So as a result, lending is on a pause, or lending is kind of a code, right? So that's why I said, like, lending, what used to be called as a feature, everybody wanted to get into the lending. It was so prevalent enough that, as I was saying in the talk, it was no more a service or a unique product, right? It became a feature, but now it is a bug, because people who have given money, they are not able to collect it back. And no more they will be able to figure out properly how to give it and things like that. So it is not good, or at least that's how I think about it. It's again my personal view, right? Does that help, Girish?
Well, there's a question from Joe J. Doctora.
Yeah.
Do you see MDR going down with the explosion of digital financial transactions? And any suggestions on how we can help the micro businesses become financial about fintech?
Sure, Jyoti. So first I'll see, like, I'll talk about the MDR going down, right? It's a chicken and egg problem. Until unless we bring down the MDR rate to a greater extent, we will not be able to see a wider acceptance rate, right? Like, let's say that if the transaction value is 1,000 rupees and then you are spending 2%, then it is a very small amount, and then you'll be more than happy to spend the 2% of 1,000 rupees. But let's say that you want to spend 2 rupees, 2%, and most of the times, like, there is also a fixed cost to it. Sometimes there is also yearly payments or the annual monthly maintenance and things like that. And as a result, what happens is, apart from the MDR, there are also an additional cost, right? So which means what the cost of one particular transaction becomes much more higher. But then the challenge is, whenever you make all of this money movement, like, there are 4 players or 5 players in this value chain, right? Like the issuer, acquirer, the payment service provider, and then switch. And somebody has to pay for all of them. And who will pay the piper becomes a question. So until unless we kind of factor in the cost and then somebody figures out to pay for it, like, the MDR cannot go down, right? So it is like how people think that, hey, what, if I move from a physical store to an online store, my cost does come down. Actually, the cost doesn't really come down, right? It is just that the cost structure differs. So if you move towards online store, still you need to take care of your delivery. You need to pay for your tech engineers who actually build and maintain the stores. You may not have 10 people manning the stores, but probably you might need even 15 more people to make the deliveries for you. So it's just that the cost structure changes. So it is the same thing even with the digital financial transactions. There will be cost structures and somebody has to bear the cost for all the players, and then they have to pay for it. So what I really foresee is eventually people will come to accept that, hey, what, it is the cost of doing business and we have to pay for it, right? It is just that, as I was saying in the other times, we really do not think about, hey, what is the cost of this 100 rupee note that we have, right? Like it might be $1, but there is a cost involved to it. The government has to ensure that there is no counterfeit. And if there is a counterfeit, then again, it brings down the value of the monetary system. And then the transportation, privacy, and then, like, if the notes go old, then we have to exchange it. So even there is a cost involved even with the physical currency. It is just that you and I don't spend for it, the government is spending for it. So somebody has to spend for it, and there will be a way to do that. Yeah.
There's a question, how do you see digital payments impacting corruption in India?
Nikhil, that's a tricky one. Probably we will figure out a way to still pay for it.
And I will not name the guy who has asked the question. He's also very tricky fellow.
See,
just privately send this question.
See, hopefully, God willing, that it should actually bring down it. But, we will figure out Jugaad way even still for it to happen, right? Like, I do not know. Hopefully, it should come down.
Hopefully.
Yeah, hopefully. Yeah. Let me be diplomatic.
For a change, your answer is very short.
I tend to stay away from tricky questions.
Okay. There's one more question. What is your advice to those of who shy away from digital payments other than credit cards?
It's a personal choice. Money is personal. Whatever that helps them, I'm fine with it.
Is there a reason to have physical debit and credit cards? Can't this be digital, like app or QR code or whatever?
It will go digital, Nikhil. Probably that, like, at least I have seen innovations where people have actually kind of created a digital wallet, right? So which means if you have your 5 digital cards, you can actually create an app and things like that, and then put up your all, you could digitize all your physical cards that you have, and whenever you go even towards the POS machine or wherever that you go, you could pick and choose your physical debit cards but in a digital version of it. So we have seen innovations like that, and we see in certain other aspects of the market. And yeah, there are other QR codes where you can pick and choose from your bank account, your credit card and debit card if you're linked all of those things, right? Like that's what the wallets do. um, yeah, we could still do away with the credit card and debit card, the physical ones, yes. But
Last
still, that is why I
question.
said in the previous question, at the end of the day, still you need digital networks or the network companies like Visa and MasterCard.
Questions. The earlier question, I should name the person. I'm sorry. That earlier question was from Atul Sharma regarding physical and debit, and regarding the other question, it was from Malni Shankar. Now, last is from Sudhir Verma. He asked what with large players beyond networks like FB, Google, Geo, and many more following into investing heavily into payments. How do you
Okay.
see the future, particularly low ticket payment? Who do you foresee leading?
Hmm. It's a good question, but it's a kind of a tricky one, right? Because as I said, like, there are a few things that will happen. One, some of these players will build their payment stack all by themselves. Some of the players will partner with the existing payments companies, right? Like say, at least among these 3 players that have been mentioned, we probably work with 2 of them, and then we help or we partner with them for the payments in many of the places, right? Like they're all public information that is available on how we partner with 2 of the 3 players that Sudeep has asked me this question, right? So in general, like, it is also a function of what they are doing. And it is not just that they want to get into the payments business. There is a strong and a very good reason why somebody wants to get into the payments business. It is a function of their strategic business. I know that probably I did not answer it to the expectation, but that's for a reason. So sorry.
So Pradeep, now you can just switch on your camera, right?
Okay.
Yeah. Thank you, Pradeep. It was a fast track presentation and very nice to have all this information from you. And thanks a lot for all the questions answered. And wish you all the best with PayPal.